Hey, my name's James Nicholson, and in this video I want to talk about are interest rates going up or down. Now, I don't mean the base rate, the Bank of England base rate. We covered that recently, and last week that obviously went up. I'm more interested in the actual rate of interest that you're going to pay, and I think that's way more important to look at than if the interest rate on the Bank of England goes up. So let's talk about that in this video. But before we jump in, we're just about to launch the Property Accelerator online training. Now, this is going to give you the opportunity to learn all about property investing from just £1. And you can take a test run with the Property Accelerator for just £1. You're only going to be able to do that if you join our waiting list. So we've got a VIP waiting list, and I'm going to put a link to that in the description and in the comments. So make sure you fill in your details and join that VIP waiting list. And while you're here, let's quickly subscribe to the channel and hit the bell, and make sure you hit that like button as well. So, interest rates. Obviously, the base rate's been going up for a while. We had interest rates at pretty much zero for a little while. And we've now had 12 consecutive back-to-back interest rate rises. And it really is starting to get some pressure on people now. Now, a lot of people potentially could end up on the standard variable rate if their house has gone down in value, or maybe their circumstances have changed. I have a friend that had a great job. They're now unemployed temporarily, and their mortgage deal has ended. So they're not able to get a new deal at this point in time until they get a new job. Fortunately, they've got decent savings, so they're just having a bit of a relaxing time, and they're on the standard variable rate. So since last week's Bank of England update, there are various lenders that have made decisions on what they will do. Now, normally what would happen is immediately after the Bank of England increased rates, banks pass that on to you. However, that didn't happen this time. And there's a little bit of a change, which is interesting to see. So a few banks have decided to hold their interest rates, and that is HSBC, Santander, Skipton's, who I mentioned in the last video, are really starting to get a lot more news about them with regards to mortgages, and the Coventry Building Society. So those four lenders have decided that they're not going to pass on that rise in interest rates to people on the standard variable rate. Very noble of them. However, they're not just doing that to be friendly to you. They're doing that to stay competitive in the market. That's the reason. So don't think that they're that great. Barclays have said that they're going to pass that interest rate rise onto their people on the standard variable rate. So they're pretty much the only one. And then there are lots of other lenders. So we've got Virgin, Nationwide, Metro Bank, TSB, Leeds Building Society, Yorkshire Building Society, and Lloyds, who are having a wait and see approach. So they haven't actually passed it on immediately like they would normally. They're having a look, see what the market does, see what their competitors do first, and maybe a good chunk of those might keep them the same. So that's good. That means people on the standard variable rate, they're not getting hit as hard as they maybe could. However, what about new purchases and stuff like that? Well, it's been a week now since the interest rates rose. And so I decided to start having a look at the market and seeing what good interest rates could I get as a buy-to-let investor. And so I went to Money Supermarket, probably the easiest place to check the market, and just saw what interest rates are out there. And it was interesting to see that the rates pretty much are the same. They haven't gone up for a few months now. And so the best lender, which I've got quite a few mortgages with these guys, is the Mortgage Works. The Mortgage Works. Now, I can't remember who. You can have a Google search. But they're either part of Nationwide or Halifax, I think. It's just a sub-brand that they've got there. And so they're doing a rate at the moment. How long is this fixed for? So it's a 2-year fixed. And it's really cheap. Starts with a 3, which is a good sign. 3.84%. And the fees, this is if you're buying a 100 grand house, so you're borrowing 75 grand. The fees are quite expensive. And that's where they're making a chunk of their change here. And so the fees are £2,200. But I wouldn't have a problem with that. And so if you were looking to do, actually, let's say the monthly payments that you'll be paying. So you'll be paying 240, right? Now, you buy a 100 grand house up north, you can easily rent that out for 575 all day long. In fact, you can find properties even cheaper than that, that are in good condition, they're ready to go straight away. That is a pretty good deal, in my opinion. And so I would easily be able to buy one of those properties, rent it out for 575. That gives me over 300 quid potential gross profit. I'd run that through a limited company, so I might have to go to a different lender, but there'll be similar rates, right? So the point is, if Mortgage Works are doing this rate, there are going to be other lenders that will be doing similar rates. Might be 0.5% higher or lower. It's not going to make huge differences in that. And what this indicates is that lenders really are starting to feel that the interest rates have peaked. While the Bank of England isn't saying they've peaked, they were saying it a couple of meetings ago. They were saying interest rates have pretty much peaked. They're not using that language anymore. They are saying that inflation is going to fall off a cliff still. Not seeing it yet, but that is still what they're telling us, that inflation is going to fall off a cliff. And potentially banks have decided that they don't feel interest rates are going to rise massively much more this year. That's potentially good. And I think as an investor, how we've got to look at this is, when times are difficult is where we've got uncertainty, right? And so if the banks are starting to feel more confident and certain, that means they'll be more likely to lend money. It also means when you get a valuation, you're less likely to get downvalued as certainty comes into the market. And I've had this, and I know a lot of you maybe that watch this channel or other investors have had recently. Since November, it was quite hard to convince surveyors that houses were worth what they were worth. They were all down valuing because they didn't want to have that risk of lending debt and then it goes into negative equity and they're going to get judged on what they appraised that house to be worth at whatever point when they did that valuation. And so they were erring on the side of caution. But what will happen is, if we now get some predictability, interest rates become more stable, which they definitely are, because these 3.8 rates that we've seen have been there for about 4 months now, that they've been sticking around at that similar level, even while the base rate was increasing. And that gives us a little bit more confidence in the market that you can go out and do deals and be confident with the rate that you're going to end up on. Now, what would I do with that kind of deal? Because you can get other deals that you can fix for 1 year or 5 years. I would probably myself fix for a 2-year deal, because while interest rates are not going to come down as quickly as we now hoped, I think with fairly high confidence, in 2 years, this situation will be massively behind us. Whether we've had a market correction or whatever happens, I feel interest rates will be lower in that period of time. Now, I don't have a crystal ball. I can't say for certain. That's what I would do. But I have a portfolio that doesn't have a lot of debt on it at the moment. It's fairly debt free. So I'm waiting for the market to get me some good deals. We're always looking for those deals. Even today, we'll pull some equity out and we'll run those deals and go with those. So let me know your thoughts on that. Where do you think interest rates are going to go? Do you think the deals that you end up getting, not necessarily the Bank of England's rate, but do you think the deals that you will get will be fairly stable now going through to the end of 2023? Do comment below and let me know your thoughts. Do smash the like button, guys. Do subscribe and hit the bell and get your name in that VIP list. And let's get you in the Property Accelerator online. Remember, you can join next Friday from £1. It's going to be absolutely incredible. So do join that now. Do check out everything else on my channel, including this video right here.